Okay, so candlestick patterns. Why are they important? These are the last piece of confluence in your strategy before you make a decision. To the untrained eye, it can be very, very confusing. Different shapes and lines on the charts, it all just looks like a jumbled mess. But if you can pinpoint the prominent ones, the ones that are important and the ones that make a difference, this will change the game when you start to identify it pop in your head like that. It's like anything else. It's like learning a new language. The more you do it, the more fluent you are in that language, the more you can identify things and use it to your advantage. And especially in terms of the strategy that I'm teaching you, it's very, very important. So let's say the market has made somewhat of a move like this. We're in a clear downtrend and the price has started to retrace back up to one of its significant levels. From here, we're going to look at the first candlestick pattern that I think makes a hell of a lot of difference. And this is the engulfing candle. So no surprise that the big clue in the name engulfing candle means that it can engulf a smaller, weaker candle that has become previous in the sequence of candlesticks. Engulfing is to completely overpower something smaller than it in size and scale. This engulfing candle can be bullish, it can be bearish, but the key point to notice is it's far larger than a weaker, smaller candle previously. It's covering it from the top and the bottom, and this can often be a directional catalyst in the direction that we've predicted the market to move in. Before price made its move to retrace back to one of its key levels, which candlestick pattern would you identify as the engulfing one here? Clearly, it's this candle. It's far, far larger than the smaller, weaker bullish candle to its left and pushes the price up to this key level up here. This is what we would identify as a directional catalyst, and this is really, really important. We're going to see this again and again and again throughout the process, and it's one of the biggest telltale signs that you're right or wrong in your prediction of which way the market's going to move. Now, one very important thing I'd like to point out here is that a momentum candle or a directional catalyst doesn't always necessarily mean a trend reversal. These two things aren't always in sync, but they can be in the right conditions. For example, this bullish candle here is in fact a trend reversal catalyst. It's broken above the level of resistance and closed above. This is really important. It's closed above, causing a reversal to the trend and pushing price up. Now, in comparison, in this example, we have both a directional catalyst and a trend reversal because it's clearly an engulfing candle, number one, and number two, we've broken and closed below our support level here, which has pushed the price down because of this trend reversal and directional catalyst engulfing candle. Now, keep in mind that, as it is with essentially every other part of trading, this won't happen 100% of the time, but you should be confident that once you identify, oh, there's an engulfing candle, the market should go the way that you predict it to go, or at least begin to move in that direction. So it's keeping you ready. It's making you prepared to take action. Now, the second candle that I'd like to talk about here is same but different to the engulfing candle, and this is the momentum candle. Structure-wise, it has a very similar appearance. It's big and it's bold, but I would say it holds more weight as a momentum candle when you look at the candlesticks that's formed before this. When we see a large area of low pressure consolidation, and then all of a sudden we've got this huge burst of momentum, that's what this is, we start to see quite a rapid change in price structure. So when we look at this scenario here, we have an area of low volumed candles followed by this huge bullish candle which breaks above the resistance zone, closes above, and driving the price upward. And notice a very large wick on this candle as well. There's been a lot of volume, both bearish and bullish, but the momentum of the bulls have far outweighed the bears, and it's forced price up in quite a dramatic fashion. Sometimes all price needs to break out of consolidation is just a bit of momentum to push it through and to keep on moving. So in trading, when momentum builds and price starts moving, generally speaking, it will keep moving in that direction as strength builds and traders jump on board this movement. Now, obviously, it's not going to keep moving forever, but if you could picture this as like a snowball rolling down a hill and it's gaining momentum, getting bigger and bigger and bigger, eventually it's going to stop somewhere. So what are blocking candles? What do? Well, they block the price from moving any further up its specific move that it's made. Now in this case, we have an upward movement where prices started to reach a resistance level, and this is commonly where these blocking candles will be placed. An area of key resistance or key support. These are candles that stop the momentum caused by the engulfing and the momentum candles before and start to create minor consolidation. So when prices made a significant move, like something like this, we start to see a formation that's almost as if there's like a wall in the way. Now on the basis of which way the market's going to continue moving, is it going to go up or is it going to give in to the resistance of these blocking candles and force the market back down to a price which previously came? Well, this is all determined by which candle makes a move after these consolidation candles. Here we have quite a strong momentum candle which pushes price up slightly before getting met by more blocking candles. Next, we can identify that price didn't continue to keep pushing up. We can see that this bearish candle closed below the levels of these blocking candles, which have pushed price back down again. What we really need to learn here is that simply these blocking candles indicate change in the market. Whenever you identify this point of consolidation or blocking, it's going to indicate change in some way, shape or form. Keep a mental note of the processes that follow up from these yellow zones that I've marked here. The yellow zones indicating the blocking candles. Notice how there needs to be a candle that stands out from the others to push the market in a specific direction. Now the next candlestick I want to talk about are doji and hammer candlestick patterns. Dojis are candles where there's been a battle between the bullish and the bearish movements, and they have somewhat met in the middle. These candles can specifically be found after a movement of large volume. In terms of this example, we've had a large volume of downward movement. Now commonly what these candles represent is indecision in the market. When we look at this example here, a clear downward movement can be met by a doji candle which can completely flip the script and change the course of the direction of the trend. Dojis represent indecision in the market. Now let's look at a more realistic perspective of this doji candlestick. This is a candle with a very small body and large wicks, indicating some form of fight between the bulls and the bears, as in order to create these wicks, prices had to move both upward and downward and then come back again to meet in the middle to form this doji candle. If the doji candle closes green, it means the bulls have slightly managed to get the upper hand in this battle here. If in a slightly different scenario the body of the candle is more at the upper end of the wicks, this indicates that there's been a lot of pressure towards the downside. The bears had had most of control in this battle between upward and downward movement. However, near the end of the closing of the candle, prices then started to shift upwards and then closed bullish. This can commonly be called the dragonfly doji. Flipping it the opposite way around, the gravestone doji has the same process but the other way around. But what's important to note that all three of these doji candles all promote indecision. The direction and volume of the market and which way it's moved can be completely changed because of this candle. And this candle is the clear telltale sign that there's an indecision. This is the point where things might start to move a different way. Hammers are very similar to the doji, dragonfly and gravestone patterns we talked about. However, these hold slightly more weight in terms of being either bullish or bearish because of the size of the body of the candle. This has higher volume than the doji candles listed before. Let's look at a real market example for this. After marking in our zones, we identify that there's a doji candle at the bottom here. Now this doji indecision was quickly met by a bullish engulfing candle which very slightly pushed price back up to this very messy zone of wicks and consolidation here. Now notice that in the formation of these candles here, we have a bearish hammer followed by another doji and a wick that's pushed up. It's tried to break through, but it's not succeeded. Now this is where it's met by a directional catalyst of a bearish engulfing candle. Again, pushing price down to be met by another indecision, which then changes the direction of the chart, helped with other confluences like this bullish momentum candle, which now finally pushes price up, closing above this area of resistance and pushes the price all the way up. Now what can we take away from this? Well, the dojis represent the indecision in the markets. The market wants to change, And in order to change, it has to be met by a directional catalyst which pushes the price in a specific direction. How far that direction could be varies every time. But if you identify another doji candle after a momentum candle, you know that maybe this isn't the time that's going to keep flying. Maybe this is another pause. It's a waiting game. Trading, a lot of the time, is a waiting game. Patience and persistence is the key to success here. This is another visual representation. Look at all these doji candles that I've pointed out. All of them have very, very quickly been followed by a directional catalyst. Now, I understand that it's very, very easy to be pointed out these candles. When you see them all, when they're all in their jumbled mess, it's hard to pinpoint exactly unless you're clearly looking in depth of every single one. But after you do this again and again and again, you will start to almost subconsciously identify these. That will be in your brain. Oh, there's a momentum candle. Oh, there's a doji. It's just getting used to it and getting used to the differences and the formations of each one specifically. But these are the ones that I use and find to be the most consistent in making market decisions.